You did everything right. You studied, you worked hard, you saved money, you avoided bad decisions. So why does one unexpected bill still feel like it could collapse your entire life? While other people lose businesses, lose millions, make mistakes, and somehow keep moving forward like nothing happened? Here's the uncomfortable truth, that you're carrying nearly all the risk in your life for very little upside. And the people getting richer, they've structured their lives so they carry less personal risk, not more. Why am I the one taking all the risk and still staying broke? You work for money. You save what you can. You avoid danger. You try to be responsible. Yet somehow, the people getting richer seem to be risking less, not more. This is not imagination. It is the result of one principle that has governed wealth creation for centuries. The rich don't primarily use their own money. They use access, credibility, and leverage to use other people's money. And the terrifying part, you don't have to be rich to start doing this, but almost no one teaches you how. My name is Solomon. This video explains why you're taking all the risk and still not getting rich. If you're someone who has taken all risk, but you wonder why getting rich seems impossible, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Look, this isn't about blaming anyone. It's not about hating successful people. And it's definitely not about get-rich-quick nonsense. It's about understanding the rules that determine who struggles and who scales. Here's the thing. Most people are taught that wealth comes from saving your way up, so life becomes a loop. Earn, spend, save a little, repeat. It feels responsible. It feels safe. It feels like progress. But mathematically, it almost never creates freedom. Let's say you manage to save $500 a month. That's already difficult for many people. That's $6,000 a year. After 10 years, that's $60,000 before emergencies, inflation, or life happening. Respectable? Yes. Life-changing? Usually not. Meanwhile, wealthy individuals operate on a completely different sequence. Build credibility, control assets, use leverage, capture upside. Now, you might be thinking, sure, but they already have money. Sometimes. But here's what most people don't realize. Their biggest advantage isn't money. It's insulation from catastrophic loss. Your brain is wired for survival. If losing $2,000 would destabilize your life, you will avoid any move that could risk it, even if the upside is $20,000. So you protect what little you have. Meanwhile, wealthy players structure deals so they don't personally absorb the worst outcomes if things fail. This is not luck. It is design. And this is where it gets really interesting. Using other people's money does not mean scamming. It does not mean gambling recklessly. It means aligning incentives so multiple parties benefit from one opportunity. Banks do it every day. Corporations do it constantly. Governments do it at massive scale. Real estate developers practically live on it. Imagine someone wants to build a $200 million apartment complex. Do they bring $200 million in cash? Almost never. They assemble financing, bank loans, investor capital, advance payments from buyers, land used as collateral, sometimes tax incentives. Their personal cash might be a small fraction of the total. If the project succeeds, they control a massive asset. If it fails, losses are distributed across lenders, investors, insurers, and the market. They are not avoiding risk. They are redistributing it. Here's another critical insight. Wealth is not the same as liquidity. Someone can be worth $10 million and still not have $100,000 available in cash. Assets like real estate, businesses, or equity stakes are valuable, but not instantly spendable. Selling them takes time, legal work, and often large tax consequences. So instead, wealthy individuals borrow against them. They unlock cash without giving up ownership. It's like using your house as collateral for a loan, just on a much bigger scale. Now you might be thinking, okay, but I can't do that. Not yet. And not because you're incapable, but because leverage requires trust. And trust is built on three things. First, credibility. Lenders ask one simple question. Why should we trust you with this amount of money? Credibility comes from evidence, track record, skills, stable income, reputation. Collateral, professional history. No credibility means no leverage. Second, proof of cash flow. Banks don't care about dreams. They care about repayment capacity. This is why many entrepreneurs keep jobs in the early stages. Predictable income increases borrowing power. Third, network access. Money moves through relationships. Most large opportunities don't come from cold applications. They come from introductions. Without networks, you rely on formal systems, which are stricter and slower. So how does an ordinary person start changing position? You don't begin by asking for millions. You begin by becoming someone worth backing. Step 1. Stabilize your personal risk. Emergency savings. Debt control. At least one reliable income stream. This isn't glamorous, but desperation destroys negotiating power. Step 2. Build bankable credibility. Think like a lender. What proof shows you handle money responsibly? Consistent income history, clean credit behavior, business revenue records, certifications, references. Every stable month strengthens your position. Step 3. Use productive debt, not lifestyle debt. Not all debt is equal. Bad debt buys things that lose value. Good debt buys things that produce income. Ask one question before borrowing. Will this pay for itself, or will I pay for it forever? Step 4. Partner instead of struggling alone. Many successful ventures exist because different people contribute different resources. One provides capital, another provides expertise, another handles operations. Risk becomes shared. Upside becomes scalable. Step 5. Reinvest instead of upgrading lifestyle. This is where paths diverge dramatically. When income rises, many people upgrade expenses. Wealth builders upgrade ownership. One buys status. The other buys assets that eventually fund status without stress. The real difference between ordinary and wealthy people is not intelligence. It's position. Wealthy individuals operate from a place where failure won't destroy them. Opportunities reach them faster. People trust them with resources. They can wait for long-term outcomes. Your goal is not to copy their lifestyle. Your goal is to move into similar positions of leverage. You cannot jump from zero to millions overnight, but you can move along a ladder. That's self-funded effort, to small leverage, to larger leverage, to asset control. Every financially powerful person you see climbed some version of that ladder. Even those born wealthy must maintain credibility to keep access. So the real question isn't, how do I get rich fast? It's, how do I stop being the only one funding my life with my time? Because the moment money, systems, assets, and people start working alongside you, everything changes, not instantly, but permanently. Here's the quiet truth most financial advice ignores. You don't need to be rich to use the tools of the rich. You need to become low risk enough that others are willing to bet on you. And when that happens, doors open that previously seemed invisible. Opportunities start appearing. Leverage becomes available, and you realize something unsettling. The gap between ordinary and wealthy was never just money. It was trust, structure, and positioning. Build those slowly, deliberately, and you stop asking why the rich don't risk their own money, because you'll finally understand how they made that possible. If this shifted how you think about money even a little, hit the like button. It tells the algorithm this kind of content matters. Subscribe if you want practical financial thinking without hype or shortcuts. And most importantly, start thinking less about earning more money and more about building a life where money doesn't depend entirely on you. Because the real goal isn't to work harder. It's to stop being the only engine in your financial life. I'll see you in the next video.